Good morning, good morning. Aloha, brother. How's it? Another beautiful day in paradise? What's up, Badir? Jerry Lonigan, how you doing? How's it going, guys? Okay, we made it through the week. Hey, Nate, what's going on? Oh, we're kind of right back where we started, eh? Huh. In trading, this is what you call a round trip. It's a round trip. Oh, man. Oh. Hey, Cliff. Welcome to the folks joining us on YouTube. I'm JJ. This is the tradingsyndicate.org trading room. I'm vwaptrader1 on X. And we are here helping the retail trader make some money so you can enjoy your life. Yeah. You know, brother, being 100 handles down is possible. The problem is you got to catch that move and then cover. Because the way this market is structured, if you look at how something is built, and most trading rooms won't talk about this because they've never built a company, they've never built a stock, they've never built a chart. I know it sounds egotistical for when I say that, but that was my job. I was a mechanic, right? So if you had a broken company, if you had a broken stock, you'd call me and I'd help fix it. Or if you wanted to build a stock from scratch, right? I'm your guy. I create the chart. I tell you what to tell investors. I tell you how to market the stock so people buy it. So when you actually create and build, you actually understand the mechanics. And that's what we're trying to do here. We're trying to help our retail brothers and sisters cut through all the noise. So let's see what's going on. Now, we had drama this week, right? We had that drama in the beginning of the week. We had all of this tariff, no tariff. And of course, he walked it all back. Yeah, no, take profits, brother, right? And when the money's on the sidewalk, you got to pick it up. You know, especially in this market, the moves reverse so quickly. You know, traditional traders have a hard time in this market because they don't understand the underlying structure of the market. Now, that gap, I left this here. You know, usually I erase it, but we are trading in the gap that was created here. Now, a lot of people will say this is the gap low or this is the gap low, but either way, this is the gap high and we filled it. And you'll notice we're trading in that gap and we're filling it out. We still have people who are trapped long here. And the ones who didn't get flushed out, well, let's see what they're going to do. The other thing that's really interesting, and I left, this is the overnight from yesterday. This is the Wednesday overnight. This is the Thursday overnight, and then we're going to go into Friday. So if you look, you see we had a double distribution. Now this is where market profile can be helpful. Thursday's overnight profile had a distribution here, single prints, and another distribution here. And if you notice, Yesterday, we went into that lower distribution and rejected back out. Tonight, the low of tonight has not been able to crack 69.33 half. My level is 69.33 and 3/4. So this position from the overnight and this position from that crazy move up, that is from Wednesday, that is really what we're watching. These positions are being sold yesterday and tonight. Tonight, you'll notice, check this out, folks. See, you have a double distribution in the previous Globex session, and you got a double distribution in this one too. Right? Now, when this sort of thing happens, what it does is it's telling you where the shorts are. Cisco, mahalo, brother. Posting that on YouTube. Right? So we've got another double distribution, which means our poor friends, the shorts, like Winnie the Pooh who got his head stuck in that pot of honey, they're trapped underneath 69.50. Here they were trapped under 69.33. So if you look at time frames, these shorts were forced to cover yesterday, and there's still bid to cover here because we can't get underneath here. Overnight inventory, I'd say, is about 95% long. Now, what does that mean? Everybody always asks me, how do you tell inventory? Well, all you do is you look at the close of yesterday, and then you look at the volume and time spent above the close versus below the close. So you'll see the blue stuff is 70% of volume, and then if you look at that and you add that to probably another 20%, there's about 10% of the volume is under the close. The rest is above. So inventory is long. Now, when London opens in 20 minutes, we're going to see if we can fill those single prints on a move back down. Right? Because the normal course of business when inventory is long is to correct it lower. Now, if it doesn't correct lower, right, pretend this is the close. If the inventory does not correct lower, that means somebody is a heavy buyer and is stopping that correction, because the size sellers who are selling here, as soon as they get down to that level, you can pretend that level is a glass door, and they can look through that door and they see all the buyers lining up, holding money in their hands. And when they see that, they raise price. Now, if those people start walking away from the store, they will follow them and sell them product at a lower price. Now, that's a very simple concept, but nobody talks about that because people forget it's a market. And in a market, you have to price your inventory so it sells, right? Because what's the point of tying up capital and holding inventory if you can't get rid of it, right? It's like, buying a bunch of cars at 3 times what they're worth and trying to sell them at 4 times what they're worth, and then the market tanks on you. It's not good business, right? It's tough, right? It's tough. We gotta be very, very aware of where the inventory is priced, so we're not buying it up here and we're not shorting it down here, right? And that's what we always try and do. So that's that's where everything's kind of sitting. On the daily chart, the old candle wax, this 69.88, I'm looking for resistance up there. And can we stay over 69.25? We had trapped long inventory. We flushed it out under 68.90 and right back up. These V-shaped recoveries, they happen because these are margin call shakeouts, right? So people who buy using credit, right? Just like when you buy, right? Just like my buddies in the 80s, they'd get a job, they'd go buy a brand new Camaro or a Trans Am, go buy that fire chicken, finance it, and then something would happen and the car would get repossessed. That's what's going on here. This is the repossession, right? And it repossesses into the big money hands, and then they just take it and resell it to us, right? This business is like the world's largest used car lot, right? They sell you the car, you can't afford it, they buy it back cheaper. They put some Armor All on the tires, sell it again, buy it back cheaper. Sell it again, buy it back cheaper. So this time, you know, Hefe came out and said he was going to invade Greenland, and then he just kind of went, you guys can't take me seriously. I was just joking. And all of a sudden, we got a lot of people trapped short under 68.90, right? And that short bid is moved up. The bottom of the candles are where the unfilled buy orders are. That's what creates support. So how do we trade this tonight? Well, we're in distribution right now, unfortunately. Okay? And I missed this J-low trade because J period opened, it corrected inventory, but it did not take the lower stops. And then it had a nice little rotation back up. I'm using yesterday's balance zones, and you'll have to forgive me. I'm being a little lazy. Yesterday's balance zones are 19.25 to 25. We're still in, I just wanted to show you guys that we're still in distribution. We are still in distribution of the product that we picked up cheap during the early part of the week, right? And that way you can have a little bit of perspective, right? Now this period, these charts that you see on the left-hand side of the screen, they're what we call market profile charts, all right? Otherwise known as a TPO chart. Now the fancy people like to call it a TPO chart, which stands for time price opportunity, which makes it even more confusing. Basically what these market profile charts are, they're a fancy half-hour candle chart where we give each half-hour candle a name. So that's why they're H period, I period, J period, and then we go from uppercase to lowercase because the overnight session is longer, right? So we're watching now this K period. As it comes down, can it take the low here of J, right? Don't let your position get repossessed, right? We got to be quick in this market. That's why I like to teach people how to scalp and then teach them how to hold trades after they develop their skill scalping. Because scalping teaches you how not to get eaten, right? Scalping teaches you how to react quickly and to have a trade management execution plan, which you're going to need when you're trading larger time frames. Okay, here we go. Right? So we took that J low. When you take that low, you're going to crack that stop. Now let's see how much of this candy falls out. See, the overnight point of control, the distribution moved from 53 up to 56.5. Now we got a short going. Let's see if we can go tickle VWAP, which is at 52. Right? So guys like Cisco would be short. Why would they be short? Well, because inventory is long, and on the half-hour candle, the highs are getting lower, which means the wholesalers are putting this stuff on sale. Beautiful, beautiful. This is good. This is healthy. Liquidation is healthy in a market, right? Two-sided trade is the way to go. Now, we have a short position here from 46 to 48. That's these single prints, that double distribution I was talking about, that is a very obvious short position. The more subtle short positions are at the bottom of these candles. Now you'll notice we just went to VWAP and stopped before VWAP. So there's a space between the bottom of that candle and VWAP. That's where the short sellers came into cover. And what they did was they pushed each other out of the way and paid more because they saw that supply was running out. Why am I using yesterday's balance zones? Because I want to show you guys the position. Okay? The term is exactly front running. Right? Well, number one, Jiri, because I'm being lazy this morning. The other reason is I want to show you the position. Right? I want to show you that we're still in distribution. And when I woke up, we were one time framing, and I didn't want to use these tight little distributions as balance. Right? So the combination of my laziness, which I turned into, let's turn my laziness into a teaching lesson, right? So you can see that we went above, we're at 4 times profit, look above and fail of 69.61, short down to VWAP. Now what is front running? Front running is when you know there are going to be buyers at a level, right? You buy before that level so you can get your product, right? Because if you're a large trader and you have to cover 500 contracts, you don't get to choose where you cover, right? When you're trading size, you have to buy it back where you can because that's business, right? Just like when you're a wholesaler, you got to sell it where you can. You know, sure, you want to buy 1,000 contracts at 48 and sell them 100 points higher, right? Of course, that's the dream. But if you buy 500 contracts at 48 and sell them at 52, you can still pay your rent, right? So size traders, right, they will take profits. They're always taking profits. They're not holding on to trades, right? Unless, you know, they have multiple accounts, one for like short-term trading, one for long-term trading, and they'll trade around, right? And that happens too. So let's see what happens here. We're going to wait 10 minutes. A trade I would be interested in is if we could break VWAP. You see all this time and volume has been traded above VWAP. If we could break VWAP, that's like a trapdoor, right? If we could break VWAP, then, you know, or a piñata, right? Then all of this candy will start falling out. And, you know, a short underneath VWAP, say maybe 50, with your stop at 52, down to, where is that, 48? Because you know there are going to be bids here, right? That's what I'd be looking for right now. But I'm not seeing it because these pendeos are front-running VWAP, right? So front-running is an old term. How that used to work is, say Jiri and Cisco and I were sitting on a trade desk and we're all next to each other. And Cisco's client calls him up and tells him to sell 5 million shares of a stock, or even 500,000 shares of a stock that's kind of thinly traded. This stock's trading at $10, right? And Cisco's got to sell 500,000 shares, right? I'll hear that and I'll go short the stock because I know Cisco's going to push the price down, right? That's called front running. That's why in the old days when an important client called with a big order, you would go underneath your desk so nobody could hear you, right? That's why brokers, right? Exactly, right? There you go, right? That's trading, right? Poke them in the eye and hit the bid, right? That's why they call us eye gougers, right? So that's where the term front running comes from, right? Now in modern times, everybody knows that if I was short 58, 59, right, on this look above and fail, right, then I'd be shorting, but I need to buy it back. So if I know that everybody, his dog, his cat, his pony are buying here at VWAP, I'm going to jump the line and buy it back at 53 instead of waiting for 51. Right? Because if I'm short 58, 57, 58, and I could cover 53, 54, I could make a little bit of money. Right? And that, my friends, is trading. Trading is finding out where the buying is, where the selling is, and then we got to kind of weasel our way in between. So we got 10 minutes now till London opens. Let's see what they got. Where's Raj? Oh, Raj is driving. Oh. See now, the other thing about retail trading is you got to know when to trade, right? When you see candles like this, that's radioactive for a retail trader. Don't trade that, right? Wait for a look below and fail of a level. When you start trading, just wait for the edges of these zones. Once you get a little better and you can scalp, you can maybe buy a little bit here at 53, pop them out at 55 for a couple of points. But don't do that until you've developed execution skills. We know they're going to be sellers here, right? So the top of the candle, and I can't believe nobody's ever said this, and it took me years to actually verbalize it. The top of the candle is where the sellers are waiting to sell. That's where they're hanging out, right? They're like hanging out like, you know, like vultures, right? Flying lazy circles, waiting for you, right? That's where they sold before. That's where they're going to sell again. Exactly, like hoodlums on the corner, right? That's where the sellers are waiting. How do I know that? Because I used to be a hoodlum, right? I used to be the seller. So where I sold before is where I'm going to sell again. See? And this time they front ran that level. You see how we came up here? And we couldn't tag that level because the sellers stepped in. So now business is a little slow here. We got 5 minutes, almost 6 minutes till London opens. Let's see if we could break that 53 level. Right? So if you're trading right now and you're kind of hunting for a trade, relax. Right? Like a falcon. Hey Charles, how you doing? Yeah, like a falcon, right? We're predators, right? So we're sitting there and we're waiting for someone to screw up so we can take advantage. Right? That's really what trading is. Okay. Oh, let's see what else is going on here. How's the coin of bitterness doing? Ugh. Just kind of hanging out here. Yeah, Bitcoin is back in that cost basis that we had between 84,000 and 92,000. Good thing about Bitcoin is it's respecting that April-May cost basis from last year. I'd be worried. I mean, I'll add more. I'd love to buy some Bitcoin under 76,000, under 74,000. Right here, I gotta wait. You know, gotta wait. Speaking of waiting, that's what we're doing now, right? If anybody has any questions, okay, here we go. We got some buyers coming in, but not very many, right? Small candles, slow business. Big candles, bigger orders. Hey, Ralphie, how you doing? If price were to have broken that sell level you just mentioned, is it likely those sellers become buyers? No, no, no. Ralphie, the sellers are wholesalers, right? They got product, right? So when they see, like, if it had broken this level, right? So if I've got 500 contracts for sale and I'm selling them, if I see a bunch of buyers coming in, I'm going to raise my price. Right? The sellers don't become buyers. The sellers have product. Their cost basis, brother, is down here. See, the point of control from yesterday is down here. So underneath 46 is where they own size. 10,000, 20,000, 30,000 contracts. And they're wholesaling them up here, right? So it doesn't matter if they sell them at 54, 53, but my goodness, wouldn't you rather sell at 55 than at 53? You understand? The sellers are wholesale longs. They're not short sellers. The short sellers are the first people to come in and buy. Here. Then wholesale longs build a little position and sell into strength, which is what I try and teach you guys. Once they see competition, so Ralphie, if you and I are sitting there at 55 and you go 54 3/4, I go 54 half. Then you go 54 quarter. Then I go 54, right? And we start knocking the price down because we're still in profit because our cost basis is under 48. Does that make sense? Cool. It's really, the mechanics of trading are very simple. You've got a product and you try to sell it for as much as you can. But, you've tied up capital with your inventory. So you got to turn that capital back into cash. Even if you can make one tick, right? Even if you can make one tick on 1,000 contracts, you're cooking with gas. Hey, Chadwick, how you doing? I've been getting your emails, man, but yesterday and today are the first kind of days that I'm starting to feel better. This flu really knocked the stuffing out of me. Woof! See you, Jerry. I'll be around later. Sorry, I haven't read your message yet. Kevin, what's up? So right now, when you're a retail trader, the biggest thing that you have to do is to be relaxed so you can actually analyze and execute your opportunity. Right? If you're all pent up thinking that you got to make money here, you might go long, then go short, then go long, then go short. Now London's opening. Now let's see if London can take out that 53 bid. Right? Where that red line is that says stop right here. Right? Can London take out this stop? Here we go. Normally, it usually will, right? Most of the time, somebody ran the numbers. Most of the time, London likes to shake out the market, get some cheap product, and then go sell it higher, right? But if there are strong bids at 53, the wholesalers are going to raise price. Okay, so there's sellers at 54, buyers at 53. Let's come down and tap that 53 again. Yep, right? There we go. There we go. 2 ticks. Now, does that bring in buying or does that bring in more selling? Because VWAP is right there. VWAP is the goalie. I don't like shorting this close to VWAP, right? It's not an A+ setup, but if you are short, right, say you're short under 55, right, put some bids in here. Okay, good. Well, this is the first time we tagged VWAP, right, for hours, right? It's been hours since we tagged VWAP. So let's go take a look. There's a little bit of buying at VWAP. Watch the offer. See, the offer came to VWAP. Now we need it to offer. We need that red line to come underneath the purple line. But that's not happening just yet. So be patient. Right? You're being patient because you're waiting for those large traders to show you like to like pave the way, like a snowplow, right? Let them plow the road so you can drive on it. Wait for the next candle. Hopefully it's, see, now it's going back and forth over VWAP. Kind of tough to trade. If you're a gun to your head short, your warning level is going to be here. Your out's going to be here. And you're going to be looking for 50 and then 48 and 3/4, which is just in this area here. But if we don't offer underneath VWAP, that's a sign. Okay? So just watch. And if you're new to trading, right, there are times when you should sit and watch, and then there are times that you should trade. And that's what we do in our room, is we try and teach you when you should be doing business and when it's dangerous for you to be doing business. Right? So if you want to learn how to trade, little plug for our room, check out tradingsyndicate.org. Right? See how it's going back and forth? Right? That means there's not enough order flow to force it one way or another. Just wait. Right? Don't try and anticipate this. Right? It's better to get a little less than to try and be the first person in there. Because if you're trying to be the first person in there, you got to have the capital to be first, right? See, unlike hedge funds and prop traders who are trading size, you can't afford to be offside $10,000 on a trade, right? So that bid that was here is just here for now. Candles are still too small for my liking, right? Yeah, POC moved down to 52. My question is, do we hold those single prints at 48 or do we fill them? What do we have for news today? Do we have a... And next week, I think, is the Fed, right? There's a Fed meeting next week? Yes, there is. January 28th, FOMC interest rate decision. See, look at that. So we found bids. Look at the bottom of these candles, folks. Right? The bid is moving higher. Oh, there is a single right there. Thank you, Cisco. There is a single print right at 50. I mean, Moran. Sorry, not Cisco. Hey, RSK. Good morning. How are you? This is why I don't like taking trades short at VWAP, anticipating for this. So I was looking for this. I'm wrong. Right? The market is telling me, hey, JJ, psst, psst, psst. Right? I was looking for a short down to 48. That ain't happening right now. Right? I'm not in a trade, so I was just sitting and watching because I wanted to see the reaction at VWAP. That's called getting a lay of the land and getting some market intelligence. Right? Because when a market is not trading right at the terms and conditions under which you do business, you got to kind of sit and wait until your trade setup appears. This way you're not randomly taking trades and putting money at risk. So, for example, if you are long, you know they're going to be sellers at 56. You know they're going to be sellers at 57 3/4, 58 half, 50, 59. There's going to be sellers all the way up. Let's see if we could take out the high of the London Open. That little yellow letter where the L is, that's the Open of London. We went down and we found bids at 51. Now, the one trade I did miss, well, I wasn't really into it, was taking a long. In hindsight, it looks so easy to just go long at VWAP and put your stop under those candles. right? And had I been a bit more on the ball, I would have not been so hesitant here, right? So we're still at distribution. That's okay to miss trades, right? I'm perfectly comfortable missing a trade. It's not the end of the world. The end of the world is blowing up your account and losing all your trading capital, right? And this week has been a particularly difficult week because of, you know, that this is happening a lot in this market. This guy comes out and he says, I'm changing the macroeconomics. Everybody runs to one side of the ship. Then he comes out and goes, just kidding, right? Which causes massive short covering rallies. I mean, look at that short covering rally from 68.24 to 69.43. 100-point move, 100-point move. Very difficult to trade that unless you have capital and skill. Some trades you're not going to be able to take. They look great on a chart after the fact, but you got to have the capital and skill to trade those. And that's one thing that they don't tell you when they're teaching you trading is that you have to develop your skill. That you just can't jump in there and start trading and making $50,000 a day. That's not going to work. You're lucky if you make $50 a day when you start, right? But that's something you have to deal with, right? You need capital and skill. I've seen traders with capital lose it very quickly, right? I used to trade for the guys who worked at Stratton Oakmont. And there were these two, they were a couple, and they worked for Belfort at Stratton. And they had a phone room after Stratton closed, right? And it was in Florida. And the guy and his girlfriend, they always, they were promoters and they were good. They had 30, 40 people in a phone room, somewhere in Boca or I don't know where it was. And, they would sell $200,000-$300,000 worth of stock every morning, right? Boom, boom, boom. The salesman would bring in buying. We would liquidate. Then these two would thought, okay, let's day trade. What were they day trading? Like the Yahoo and the Flyers back in the 90s. About 45 minutes later, that 300 grand was down to maybe 50 because they would emotionally trade it all away. Now, the only thing that saved them is they had millions of shares of free stock that they could sell and get their people to sell so they always had money. But, they would lose so much money trying to day trade. So it doesn't matter if you have capital, but if you don't have the skill, you could still lose the capital. I had a friend of mine whose mother was a billionaire, and he lost $5 to $6 million betting on hockey games in Vancouver. So he thought he'd make it back by trading futures. And this was back in the day where, you had to you would have to have big money to trade futures. So he had direct lines to guys on the floor. And he lost another $6 million doing that because he had no skill. Then his mom pulled his credit line. Finally. She's like, enough. So it doesn't matter. I've seen people lose millions of dollars. Just because you have a huge account, if you don't have the skill and you don't know what you're doing, you're just going to lose a lot more money quickly. You have to develop that skill. And unfortunately, if you're at all desperate, if you're at all emotionally compromised, it's very hard to trade. And I've been there. After my heart attack, You know, I couldn't do deals. My partners were in a bad way. They were doing really bad illegal things, so I didn't want to, I didn't want to go to jail by working with my friends who I loved desperately, and I didn't want to see them go down that road. So I had to learn how to trade. And I was trading an account for a friend of mine, and he said, I don't know, he had 20 grand in it. He said, "That's okay, you lose 5 grand." And I was like, "I can't lose 5 grand, that's sick." I lost $300 the first week I was trading. I lost $300 and I was emotionally broken because I was like, I don't know what I'm doing. I can manipulate stocks, I can make markets, I can finance companies, but I can't trade these stupid E-minis, right? Because I had no discipline. I didn't know what the hell I was doing. Retail is a completely different business, you know? So when you're trading from a place of desperation, it's very hard to make good business decisions. It's very hard. Back down to VWAP again. So we have sellers at 55. See how slow it is, right? Now, I don't want to be stuck in a trade here. Now, if you're a longer term position trader and you're short under 61, I'd put, say if you were short, say you're short 20 contracts up here, right? And you covered maybe 5 of them here. I'd be putting bids underneath VWAP. Those bids are going to tell you how well your trade is working, right? We call it a lookout bid. So if you're short 20 and you've covered maybe 5 or 6 here, right, which is the intelligent thing to do, put some bids in here. Because if that buy order does not get filled, then you know that there's not enough supply. And the traders and the sellers don't have to sell at that level. If that one gets filled, beautiful. Let's see if this one gets filled. Right? So large traders trade, see, that one would have gotten filled, right? So those orders would get filled, see? Now you're covering, and you get to cover without chasing price and moving your stop and all that stuff. So you let your orders work for you. There you go. Now we're coming into these single prints. Let's see if we can break 48 3/4, right? So it took some time, but inventory is finally correcting lower. A meaningful inventory correction is going to take us down to 40, which is the close. Okay? So there we go. We broke VWAP. The piñata broke open. The candy is falling out. Right? Those of you who are in longer term trades, right? We found some buying here. The market's going to lift. And when it lifts, right? Let's see where the sellers are. So now we're under VWAP. Everyone who's above VWAP, they're trapped long, right? And people will always ask me, JJ, what does trapped mean? Trapped means you own something at 57 and it's trading at 49. Brother, you are trapped, right? So now let's watch the reaction because we know there are buyers here in this green box. Let's watch the reaction. As the market comes up, if you are short, what we want to see is we want to see a seller here. Right? We want to see a seller at 51. If you don't see a seller at 51, next level is 53, and then up here. So if the market reclaims VWAP, be careful if you're short. Right? If you were short from here, you should have covered a good amount. Say if you were short 20 up here, right? That's a 10-point trade. You should be at least covered on 10, right? I'd take half back here, at least. And then I'd put my stops, I'd move my stops above VWAP. Because if this thing takes out VWAP and it rips, right? You want to get paid. You always want to get paid, right? Don't do this business and not pay yourself. See, the other reason retail traders fail is because they're not used to making money. They're used to losing money, and it becomes a habit, right? And all these trading rooms and Twitter and all these people, they're like, oh yeah, it's okay to blow up accounts. It's okay to have FOMO. You know, you need trading psychology. No, you don't need trading psychology. You need to learn how to trade. There's no amount of trading psychology in the world that is going to make up for a lack of skill. And I'm not poo-pooing trading psychology. It has its place. But you should only use trading psychology once you know what you're doing. If you don't know what you're doing, go learn how to trade and then worry about psychology once you actually understand the mechanics of how this all works, right? See, we got a reaction here. We got a seller here. We're back under VWAP again. Let's see if we could take out 49 and 3/4, 49 and a half, right? I'm scalp short at 51. 50 and 3/4. This is the first trades. I'm covering at 49 and a quarter. I got a 49 bid on my last contract. If I don't get filled, I'll just grab the offer. I'm done, right? I'm just testing the order flow here, right? And I'm also testing to see if my brain is working. Because I saw it go above VWAP. I saw that seller. I missed the 51, so I got 40 and 3/4. And if it got over VWAP, I'd scratch. And then I put my bids in. Now, I'm short biased because inventory is long, right? But what is lurking here? It would be healthy if we made it back down to the close. But I have to wait for the chart to tell me, right? The other thing about Fridays, folks, is I'm not saying don't trade on a Friday. I'm just saying don't lose your money that you made this week by being crazy on a Friday, okay? Don't go loco, right? Be smart about it. If you made $1,000 this week, don't lose more than $100 today, right? Once you get used to getting paid, you're going to find it very difficult to not get paid. Even if you pay yourself $50 a day, right? Even if you make $50 a day, and everybody just laughs at me when I say that, but most traders don't make $50 a day, right? Most traders can't make $50 a day and keep it because they're trying to make $5,000 and they don't have the skill, right? Once you get used to getting paid and used to getting the money out of your account and paying yourself, and I'm telling you, ladies and gentlemen, it's not profits until it's in your bank account, right? Until that money is in your bank account, you haven't made any money, all right? Because you're going to lose it all back. So every week you should be taking money out of the market. Brokerage firms are not meant to wire money in. They're meant to wire money out. I've never wired money into a brokerage firm, except when I started trading futures. Right? I put stock in the brokerage account and I sell it. And I take the wire. No problem, Allcross. Thank you for being on our stream, brother. You know, we want you to be successful, and we want to spare you the pain that comes from losing a lot of money. It's very painful. So I'm constantly trying to figure out ways to teach. so I can keep it practical and simple, you know. Once you start taking money out of brokerage accounts, you're not going to want to lose that income. So that'll keep you from making bad decisions, right? Once you start used to getting paid, it's going to change your mindset, right? It's a good liquidation now. Good, good, good. Very healthy. Hmm. So Friday is about protecting your money. Right? That's why you'll see the old traders on X. They'll go, "Happy Capital Preservation Friday." The last thing we want to do is give back the money that you've made this week. See you, Gidja. Have a great day. Got 6 minutes left here. Okay. Yeah, we're coming right back to yesterday's cost basis, right? I call this the scene of the crime. Other people call it the point of control. Generally, right, Cisco? As long as we don't have too many trap shorts, we're okay, right? It's a nice, normal business. Beautiful, beautiful, beautiful. It's exactly what we wanted to see, right? So what did they do? They took the position from yesterday, okay? That's the position here. They took it and they sold it at night, and now they've put it on sale, and they'll generally stop and go back and forth here for a bit. If we get heavy selling, we'll break the close, and we'll go test that overnight low. Structurally, the low of M period, when M period opened and moved down, that's where everybody got short there. That's why the overnight low is where it is. So if we get a lot of selling, that overnight low and 69.32, if that breaks, right, if 32 breaks, then we're going to be looking for lower and to come and test the bottom here of yesterday's low. And then we'll be back in that Globex cost basis and the cost basis of there. So those are the levels I'll be looking for the downside, right? Oh, you use that Edge Pro X. How is that? That's from what's his name? The guy 71, right? That's his company, isn't it? He's a good guy. He's one of the reasons why they came up, like, he was the one who pushed for the micro. That's pretty cool. Nice work, Doc. Hey, how you doing? So there we go, right back to cost basis, right back to the scene of the crime. Beautiful for those who were short. Nice, nice, nice. Alrighty. Thank you, folks, for being with us this morning. Have a wonderful trading day. If I don't see you, have a great weekend. Mahalo, Cisco. We'll see you. Otherwise, I will be around at 9 o'clock for our next session. Come visit us at thetradingsyndicate.org. We'd love to help you on your trading journey. Thank you so much. Be safe out there. And we will see you at 9 a.m. Eastern Time. Thanks, everyone. Bye for now. Do you think any time that I could do a session with Thinkorswim TPO? Unfortunately, P. Hunter, I can't because I don't have Thinkorswim anymore. Ever since they got bought by Chuck or Fidelity or whoever owns them. So unfortunately, I don't have the capability to do that. But what you can do is you can just use the 1 minute candle chart. You can use a half-hour candle chart to mimic the TPO, and then when you're doing your trading, use the 1 minute candles to execute. Yeah, TPO software, unfortunately, is not popular software. So not a lot of trading platforms have it. And the ones who do don't really have good ones. That's why I like Sierra Chart. Window Trader is nice, but it's ungodly expensive. You know, it's 10 times the price of Sierra monthly. But yeah, we can adapt, right? We can always find a ways around, right? That's our job as retail traders, right? To adapt. So thank you, everyone. Have a wonderful day, and we'll see you at 9 a.m. Ciao for now, folks. Thanks for being with us. Appreciate you guys.